is Brian. Hope you're doing well today. It's Friday, 10th of July. I'll lead it off by reminding you that if you don't have a trading plan, it's a great time to put one together. It's coming into the weekend. You're going to have a couple days off of trading. No better time than right now to step back from the charts and focus, write down what your entry processes are, what you want to be looking at, the things that matter to you for making a trading decision. Get them all documented, put them on paper. Take the weekend to go back through the charts and back test it, at least at just a bird's eye level, and then start implementing it on Monday. All right. So every Friday, it seems like I talk about that, but it's having a trading plan is exactly what you need. You've got to have a plan to be consistent. It's going to be a pretty quick call this morning. Markets are, biases are mixed, and we can still talk about some trading ideas, but biases are mixed right now, and it's a lot of, I think we're kind of, like I said yesterday, we're at this tipping point, it seems like. Price feels, which, again, as I say every time, we don't trade based on our personal bias. We should trade based on quantifiable things that occur on the charts. But at the same time, it does feel, my nose is itching. The cat was up here on my desk earlier, and I think he got some cat hair somewhere. Anyway, price really feels heavy over here in the S&P, NASDAQ, Dow. It feels heavy, like we're getting ready for a drop. But, it could very easily just rally again, higher and higher. So, with that said, we trade based on a trading plan, like we just talked about. And we trade based on what we see on the charts. We can have our opinions, but our opinion, and even we can have our opinions, even test those opinions, but always be prepared to be wrong and don't get tied to any direction or tied to a trade. When we start getting married to something, married to that trade, we tend to want to hold on to it longer. If we have this bias, we feel like, oh man, this market's getting heavy, we're about to drop, coronavirus cases are increasing, and there's all this news about it, and finally we're starting to see some reporting coming out about earnings and blah blah blah, and we're going to see a sell-off. And if you feel that way and you start shorting the market, trying to front run it without any real decision points about where you're trading from, you might, and then the market rallies, you might get tied to that personal bias on what's happening there and not be willing to be wrong and hold on to a trade for longer than you need to hold on to it. So it's okay to trade some counter trend stuff, but always have a stop loss. Always have something that says, okay, if it moves beyond here, I can accept that I'm wrong and move on. Anyway, I'm kind of all over the map. That's not what I really wanted to start things out with. We'll get to that in a second. Let's jump in over here and talk about forex, because there may be some opportunities in forex. Then we'll talk about the S&P, crude, and gold, and then we'll hit crypto real quickly for some trade ideas, and then we'll wrap it up. I don't know if there's anything else I really need to talk about or not. So let's jump in here over to the crypto side of things, which should be news. By the way, we do have some news this morning for those that are trading forex. Canadian news is coming up in 30 minutes, so that could be impactful. We have the employment change and unemployment rate in Canada coming up. So if we're looking at potential cross pairs with Canadian involved, we'd want to wait until after that CAD news, which really it looks like, if we look at everything that's happening, the first few minutes of the market here, we've got some consolidation going on anyway. We seem to be converging instead of diverging, right? We're always looking for divergence. We're looking for areas where we have a currency that's steeply and rapidly moving up, and we want to pair that against a currency that's steeply and rapidly moving down. In order to get the best trading opportunities in forex, because we're trading two markets against each other. It's not, remember the euro USD, the USD is not a thing, right? The euro is a thing, and the USD is a thing. And in order to have potential to make money on that euro USD exchange, one has to be being heavily bought and one has to be being heavily sold, right? So we're looking using the currency strength meter indicator over here in order to see which currencies are actually moving. And right now, as we can see, our weak currencies seem to be moving back towards the midpoint. Our strong currencies are moving down towards the midpoint. So they're converging. They're all coming together as opposed to diverging. We'd want to see that divergence with them moving apart, which gives us that best opportunity to be able to pair something together and then have a trade that could potentially move for us. Now, again, I probably don't need to say this, but I'm going to say it. It doesn't mean anything will happen. It doesn't mean anything will continue to happen. It just means at that point in time when we're looking and we're making a decision to take a trade, we're seeing that we've got heavy selling on one and heavy buying on the other, which gives us that opportunity to pair them together and gives us that best potential for continued movement. And we still have to weigh it against some other things, right? We're always looking, once we determine which currencies are moving, we're still weighing that against other things. We still want to... Uh-oh. Well, that was like magic. I just made that disappear. What the heck? What pair was it? Oh my gosh. Anyway, I'll have to pull that up here in a minute. I don't know what I just clicked on. I just eliminated it. Anyway, I'll get that back in a second. So, just tell you I lost my train of thought when I did that. It's like poof, magic, gone. So we're looking for that divergence, but we're also not just blindly trading divergence. We still have to look at, well, firstly, the currencies that are moving apart from one another. Are they currency? Is it typically a volatile pair if we put those two together? Does it typically have a decent range of movement? We want to trade something that has a decent range of movement, because we need movement in order to be able to make money. So that's number one. And then number two is, at the time of day that I'm trading it, how active is that currency, or are those currencies, right? I mean, if we're trading the Aussie versus the yen at 2 o'clock in the afternoon U.S. Eastern time, not a real active time for that currency pairing because neither of those markets are actually open. So keep in mind what we're trading, right? We need to know what we're trading and when we're trading it, who's trading with us, and where the bulk of that trade volume actually occurs. So at different times of day, you're going to see more or less movement on different currencies and different currency pairings, right? So we want to keep that in mind. We also want to look over here. We want to consider, how has it moved so far versus its typical range? If we've got something that's moved, it has a typical range of 80 pips and it's moved 75 pips already. Do you really have an opportunity? Even though it's diverging from one another, even though those currencies are diverging, is there really an opportunity to pair it together and see continued movement for the day? So, and that's always with a grain of salt as well, as I say with everything else. Just because it's moved 100 pips and the typical, the average range is 100 pips, it doesn't mean that it can't move another 200 pips. It certainly could if something was if there was some, big catalyst in the marketplace that was driving those movements. But we want to base things on, what typically is happening, right? We can't plan for a black swan event. We can't. We can manage our money and whatnot properly, but those don't occur every day. So those days where you have something where you've moved 100 pips and you've got some divergence and you jump into it and it goes another 200 pips beyond that, those days are very few and far between. We have to trade based on what the norm is, right? Which is why mean reversion trading is really effective as well for a really basic and easy way to trade. So we're trading based on what normal expectations would be. So, we're looking for that divergence, then we're looking at what the current range for the day is versus what the average is for that same time period. And then we're giving some other consideration to current trend. We're also having to look at the volume detail to see, what's going on there. Are we seeing volume coming in a way that's supporting continued buying or continued selling, so on and so forth. So all things that we have to weigh together. Anyway, long and short of all that, is right now the markets are converging to one another. They're all moving towards the midpoint. We don't really see any one currency that's just standing out as a big mover right now. Now keep your eye though on the CAD. You've got Canadian unemployment news coming up. We don't want to actually trade that news. We don't want to wait for the news event and, as that news comes out, go, okay, I'm taking this trade right now. we want to let that news occur and then see how the market interprets it and what the market does with it. And then potentially, if we've got some continued movement 5-6 minutes after the announcement, then we can go in and see, okay, maybe we've got a really weak Canadian, or maybe we've got a really strong Canadian. Do we have a currency that we can pair it against that's still got some potential for continued movement? Like, for instance, I have over here on this screen, I've got the pound. Oh, that's the pound. Oh, it must have been the pound CAD that I eliminated. Let's see. Let's go over here. We're going to open deleted, and we're going to pull back our pound CAD. Yeah, there it was. So there we go. So pull back the pound CAD. So we have a look at the pound versus the CAD. Typically a pretty active currency pairing. It typically is moving 100 to 120 pips. It's moved 65 for the day. So potentially, if this CAD after the news continues to push stronger, and the pound, which has been a weak currency for a while, certainly begins to break back below this midpoint and diverge from one in that, from the midpoint. So at that point, if we have a nice divergence between the pound and the Canadian, that's potentially an opportunity for us to say, hey, yeah, let's jump into that and see if we can continue that momentum and get us into a profit point fairly quickly. The euro versus the CAD, another one. It's moved 55 pips for the day. The average is around 90 to 100, so maybe some opportunity there. But we have to wait for the news to happen. We don't want to jump into any of these things ahead of news, and and especially today, watch your Canadian cross pairs, because what you'll see, and we always talk about this with high impact news, one of the reasons we don't trade it or trade around it or want to close trades out in advance of news, unless you're in a really long-term trade. If you're trading on a 5-minute, 15-minute chart and your stops are fairly tight, you'll more than likely get stopped out on news just because of the spread. And we talk about this all the time. It's one of the dangers around news trading is when right before news happens, the places where the market makers are willing to buy or sell changes, right? They take off orders. They don't know what's going to happen, so they take off orders right at where things are currently trading, and their places where they're willing to buy or willing to sell widen, and those spreads widen. Your bid and your ask widens, so that big bid-ask spread, and don't say that too many times fast because you'll say something else. The bid-ask spread becomes a big-ask spread, so as opposed to a 1 or 2 pip spread on, let's say, the pound CAD, it's typically at like what? This is 1.2 down to like 0.9 spread, can go to like 15 pips, 18 pips, 25 pips. So why have that additional risk? Wait for the news to happen, wait for things to go back to normal, see if we've actually got movement over here, see what's left as potential range. And on a news day, sometimes the average ranges don't really come into play because you've got a catalyst now, especially if there's a big delta between what was expected and what actually happened. There could be a big potential for continued movement. But again, all of it is we have to wait until the news happens and then make our decisions after that occurs and see what the market's actually doing. Maybe nothing happens. It's totally possible as well. I know there's a lot to weigh out there, but I think we've hit all of it as to why we're looking at what we're looking at and how we're looking at it and what we need to do with the news that's coming up. So we'll leave that there. Let's move over here to talk about the futures market, and starting with the S&P over here, we've yesterday we're hanging up here around this 3170 area. We're talking about two ways of trading it, looking at potential breaks above. We're also talking about counter trend trades, saying this is a nice top edge for those that are looking at counter trends. It came right to 3170, and that just repelled it like, I don't know, like what? What is it? Unlike garlic, vampires to garlic, werewolves to silver. I don't know. Anyway, it repelled right off. It just broke straight off of it. But it would have been a counter trend. Those that are trend trading would have been looking at buys yesterday. Buys off of key levels. We came down to this 31.25. and it certainly respected that level yesterday and pulled back up. This 31.55 has been another key level that price has been having trouble around. When it was above it, it was seeing it as pretty heavy support. Finally broke above it, and it's become pretty heavy down below that. Right now, we've got a mixed bias. So our 4-hour bias is still long. Our 30-minute bias is turned to short. And I'll leave my personal opinions out of it, but we flipped it over to the 30-minute is short on bias. There's a lot of decision points still here that price could potentially rally off of. We could pull back as far as 3,100 and rally from there. 3120, which is this 3125 is our line that we've got on our charts here, is at 3125. However, it's always a range. I've said this before. We draw a line, but support or resistance really is kind of an area. There's going to be a top edge of that support resistance area. There's going to be a bottom edge of that support resistance area. So it's really more like a box, but you can't really draw a box as a ray that goes all the way across your screen. You can draw a box at a period of time, but I like to have these on here because these same levels that were used now might be used again 4 months from now. And if we have it as a line, like a ray that goes all the way across, we're always able to see it again. If we're using it as a box, we'd have to redraw it every day, and I'm probably just a little bit lazy to do that. So anyway, so down here at 3120, it is very possible that we could see it, repel off of this as a nice support level and then push back up a little bit. The key would be, on the long side, can it break back above this 3150? Can it break back above that and stay above it to continue, going long, or are we beginning to see that turning point? And it is very possible that we're in the beginning of that turning point. This is where personal bias, especially around times like this when you get these mixed bias on your charts, that personal bias can come into play, and we can start trying to force things or front run things. And that's it becomes a matter of perspective sometimes. But that's where I think more than ever, it's so critical to stick to the trading plan. If you've got a plan that says when biases are mixed, I don't trade, then you don't trade. You've got to step back. And we've had that a lot. We've had news. We had a short week last week. We had news. We had a lot of things going on, and we've been in this period where we just haven't been finding trade setups. That's a good thing, right? It's a good thing. It's a good thing that we're not just continually hitting the button, because that's what puts us into harm's way. And you often get, this is the time when traders get frustrated, right? I'm not trading enough. And I hear that all the time. I've got to be taking more trades, blah, 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 blah. You don't. The more trades you take, the worse it is for yourself, honestly. And I mean, unless you've got a reason for taking those trades, but typically if you're trading a lot, you're trading because you're trading on emotion. You're trading on what you think is going to happen. You're trading on what you hope is going to happen. Hope is not a trading plan. What I think is going to happen is not a trading plan. There's nothing consistent about that. You may think that you're consistent in your thoughts, but you're not. The only thing you can be consistent with is how you is quantifiable data on the chart. So trade the plan, So and we talk about a very simple plan here, by the way. And we talk about, especially recently, really been turning the focus to that, especially for that small account trading challenge. It's just using a very simple plan that we can execute, waiting for biases to be aligned, and then waiting for a pullback, and then taking a trade, based on the direction of that current bias off of a pullback. Super, super, super simple. But we haven't had a whole lot of opportunity on it here in the last week and a half now, but that's okay. There are other things that we can do, and there is ways to be more active, by adding in, looking at counter trend trades, looking at, levels of support or resistance in combination with this. You can look at trend lines. There's a lot of things you can add in. The challenge, and the reason I'm not talking about it right now, is that traders often want to learn that stuff because they don't feel like they're being active enough in the current trading plan. That's not the right reason to learn it. you want to learn that after you've become proficient in something and you want to add something to your process. You don't add to your process just simply because you don't feel like the process is active enough. You've got to be proficient in one thing first and then add to it. So I'd rather have us work with this small account challenge and that trading plan and be proficient with that. Then when we reach a certain level, then we can start building from there and talking about adding in counter trend trading opportunities. When do we do them? Why do we do them? How do we do them? But you don't do it simply because you think something's about to happen in the marketplace right now. I mean, you do when you get to that point, but you don't do it simply because you don't feel like you've been taking enough trades or whatever it might be. So anyway, I'm going down a whole tangent, rabbit hole again. Crude, mixed bias again. Today, I shouldn't say again. Yesterday was a long bias. It didn't go long. It turned the corner on us, and it's moving shorter. So crude is pulling back a little bit. So we've got crude don't have me on the screen. We've got long bias on the 4-hour, short bias on the 30-minute. So that's mixed. So we don't do anything with crude. Gold, same thing. We've got long bias on the 4-hour, 30-minute bias. Pulled back yesterday, so the 30-minute bias is short right now. It is possible that as we get to the 8:30, 9:30 Eastern time, that gold will flip over. If it stays above, this 1810 area, this may change and cross over for us, giving us the opportunity to look for long trading long trading opportunities on gold. On gold, it'd really come down to if we can break above 1815, break above, hold above that. That'd be a great spot to look to buy, continued buy side for gold. But right now the biases are mixed, so we'd want to avoid it. So really across the board here, S&P, crude, gold, we have mixed bias on all of these. They're all 4-hour and 30-minute is mixed, which is just a time of turmoil, and better to step back and not trade it. I can't say that enough, and I know I sound like a broken record on it, but it's true. And if there's some really great Twitter channels to follow. A lot of these guys will say the exact same thing. Mark Minervini, Calibri Trader, Trading Composure. There's a ton of them. They all tell you the same thing, and most professional traders will say it as well. You've got to know when to step back and when not to take risk. And at times of turmoil or times that you don't need to be in it. You need to find that direction. If things start to sell off heavily and you've got a lot of momentum, it's pushing the market down, be part of it. But these times right now where it starts to go sideways is, can be a time where traders get into things, especially in the futures market, because you're using leverage. You can get into something that you can't hold on to if it moves against you. So don't get married to the direction, and secondly, stick to the plan. Don't take trades that are outside of your plan. So that's it. Let's have a look at what's happening over here in the crypto land. So we're back into an upward bias on both Ethereum and Bitcoin. We had come down. We were looking at shorts potentially off of this 9,000. We finally broke back above it and looking to continue long. So we're back here hanging out at this 9170 area, and it would be a great spot to look for potential buys if you're looking for just simply to load up and continue acquiring more Bitcoin. Over here off of this 9180, 9200, great spot to look for continued buys. Same thing on Ethereum. We're down here. We've broken back above this 240 area, and right now it's down below it. But looking at breaks back above 240 would be good for potential acquisition of additional Ethereum. So additional buys. Do be careful with it though. If gold starts to sell off, if the S&P really falls hard, it is possible that we'll see the ripple effects back through the crypto markets. And I've said this before, as we're seeing more and more institutions getting involved here, if people are needing to cover positions, they're going to pull those funds from wherever they can in order to put cash in to cover positions in other spots. So it is possible that if the S&P really just craps out, and goes off a ledge, we could see, pullbacks in crypto as well. I do think crypto long term has, a lot of potential, for big gains, especially in the established coins, like Ethereum and Bitcoin. I think there's a lot of opportunity there over the longer term, and especially as we're trying to go cashless, where there's a lot of talk about going cashless here in the U.S. People are going to look for ways, because cash is king. Cash is a way that you can do transactions without having to report where everything came from and where it went. And no one wants to be that. So you're going to see things. I don't know if Ethereum and Bitcoin would be it. There may be others that offer more anonymity. Well, I shouldn't say that maybe. There are others that offer a lot more anonymity. You may see big run-ups in those as more and more countries try to go to this squeeze to move to cashless transactions. It was interesting. We were in China last summer, which is way off topic, but we were in some remote villages where you would think cash would be the only way to go, and you couldn't use it. People didn't take it. You go to buy an ice cream at a little ice cream cart, and you had to use WePay. You had to use your phone app in order to buy the ice cream. Here's cash. No, I don't want that. So I don't know. The more we try to move away from it and try to get into these larger governmental control, I don't want to get all political, but the more control the government tries to squeeze out of us with how our money is used and where it's going, it's going to push a lot of that into crypto. And I don't know. Again, I don't think Ethereum and Bitcoin, because they're so established, will definitely see a benefit from that. But the privacy coins, I think we'll see a lot more interest as we've got more and more restriction here in the U.S. and other countries as well. But that's a conversation for a whole other day. That's a rabbit hole in the topic all in itself. But definitely opportunity there. Wink, wink, hint, hint. Keep your eye on the whole move to cashless stuff here in the U.S. It's going to drive some big things in crypto. Anyway, that's it for now. I'm going to leave you guys here. We've got 4 minutes until the news comes up on the Canadian employment and unemployment rate. So that'll be interesting to see what happens there. Don't get too excited right on the news. More than likely, we can just hang out. We can hang out for 4 minutes. Let's just see what happens with the Canadian over here. What we don't want to do is get too excited on the news itself. And if we see that push, that big pop in the Canadian one direction or the other, it might move straight up, it might move straight down. You don't want that initial, that first 1 or 2 minutes of it. We want to wait until the market makers take a breath and you've got everything, banks and investment funds and everything takes a moment to digest what occurred. And as they come back into the market, that's what we want to be following, right? We want to be following the direction that money's going. Again, not where we think it's going to go. Not, Forex Factory labeled it as red, so that must mean negative, so I'm just going to sell the Canadian. That might work, but it'd be better to see how it's actually moving and make our decisions around that, right? So we've got 3 minutes until news goes. We'll just wait. I'll just stare at you blindly for 3 minutes. No, I'm just kidding. My wife's over here at the next desk in our office, getting ready to do her thing, and she typically is still sleeping when I do these calls. And she's giving me all these crazy looks. Anyway, so let's wait 2 minutes. We'll see what happens around the news. and go from there. What else can we talk about? What can I tell you about while we wait for that? Interesting story on perspective. I'm wearing this shirt with my little bees on it and stuff. Got this in China last year. I run into this every time we go to an Asian country. We go shopping, whether it's in one of the markets in Thailand or in this case it was one of the markets in China. We're out shopping, and so thinking about perspective, right? Traders always go, "Oh, I'm not taking enough trades," blah blah blah, and they not enough trades to one person is too many trades to another. Maybe you've seen 15% account growth in the last 2 months by using really simple strategies, and someone will go, "That's not enough. I need more." Matter of perspective, right? One person's gonna look at it from a perspective and go, "Well, that's triple of what I would have made in the bank, and actually 5 times of what I would have made in the bank." And others going to go, it's not enough, so perspective. Like this shirt, I think what got me off on my tangent here was, here spreads are widening. So we've got news coming up in just a minute. This is the pound CAD. This went from a 0.9 pip spread to what is that, 19? About 19 pip spread now on that. So it's no, not quite 19, 15 pip spread. So pretty crazy. Canadian has taken off. Oh, I didn't have my, this is what I meant to show you for spreads. It was at 0.9, now it's like, it went to like 15. It's coming down. We can see spreads starting to come down. So as you've got the market beginning to digest that news and return to normal, you're seeing spreads which were sitting around, 1 pip, spreading out to like 12, 13, 14, 15 pips, and now they're starting to come back down to normal. Watching what's happening with this, that we're seeing the Canadian starting to move to strength. We've got what to pair it against. The pound actually isn't a good one to pair it against. It looks like the yen or the USD would be the better pairing against the CAD. So US versus the CAD. It's moved 50 pips on the day, averages around 100. So that could be opportunity for us. The CAD versus the yen, it's moved 58 pips for the day. Average is about 60 to 80. So that one's not quite as attractive as the US versus the CAD would be. Let's scale this down to a 1 minute and just see what's actually happening on a lower time period here. Why is that not coming through on my 1 minute? It's weird. There we go. So on the 1 minute, we're not seeing, so this is just kind of watching for the last 30 1 minute periods, right? So the last 30 minutes, we can see the CAD's been tracking up. We've got the news occurred right now. It made a little bit of a blip and then hasn't done anything. We can pop over here to Forex Factory and see what the outcome of the news was if you're curious. It doesn't really matter, honestly. A lot of people watch this because they want to try to get an idea of what direction they think the CAD's going to go, but it really doesn't matter. What matters is the direction that the buyers and the sellers of the Canadian think it's going to go. Looks like the news came out mixed. Unemployment change, they added jobs, but the unemployment rate went higher. So it's a mixed bag, which is kind of what we're seeing when we watch over here and are looking at the CAD. It's not really doing anything. It's coming back. It's back to the midpoint. So we're not really seeing any level of divergence. It's not being heavily bought post, in the 2 minutes past news. It's not being heavily bought, and it's not really being heavily sold either. So there's really not much that's happening with it from a 1 minute period. Now we could watch this for the next few minutes, but we want to give it at least 4 or 5 minutes to shake out and let the powers that be interpret what's happening with the news and where they think it needs to go, and if they really want to heavily buy additional CAD or if they're going to start selling off the CAD as a result. That's still unknown. It's the jury's still out, and it very well could be that nothing happens at all, that it just stays flat, and just kind of chops around in the range that it's been in for the next bit. That's possible too. So what we'd want to wait on at this point, is we'd want to see some currencies that actually begin to diverge. Maybe the CAD crosses over the midpoint and starts to really heavily sell off. If that occurs, do we have another currency that is moving up like this yen has been, that continues to move higher? At that point, we could pair the CAD versus the yen and let that roll on. Or maybe the USD starts to push higher. If it does, we could pair the CAD versus the USD, which actually was the better of the two, right? When we looked at that just a moment ago, we determined the CAD yen, on the range wasn't a great one to pick. The CAD versus the US versus the CAD maybe was better. So now we're starting to see the CAD cross below this midpoint here and starting to diverge from the USD. If we go over here and have a look, we can see it breaking out of our breakout box. We've got a big lot of momentum, and we're seeing from our volume perspective here, the volume detail perspective, we can see that that's being heavily bought as well. Now, I don't know that I'd want to use the breakout box on this. What we could use is a different method of trading, utilizing like the average trade range, ATR EA, which would allow us to place a trade here using ATR dots to help us manage that trade. So if we wanted to switch over to that, we could certainly switch to it and pop over here, and we could use, do I even have it on here? Oh, that's my breakout box. Man, I don't have my other, I have it on this one. I don't have it on the other. Darn it. Because I was just using the this other brokerage account. I was just using it for breakouts to show you guys the breakouts in the morning. So I don't have the other EA added on there. But there's a ATR EA that would allow you to take an entry and then places your stop loss based on the average trade range, which would then allow you to trade the direction, directionality. You can trade the direction you want to go, and then it would ratchet off your risk as that trade moves in your favor. Based on the average trade range, it would start moving up and ratcheting off risk, and then locking in profit as the trade moves on. So anyway, potentially some opportunity there. We'll see if that CAD continues to sell off post news, but you get the idea of what we're waiting for, what we're watching for, and what we're looking at on an intraday basis when we're trading forex is looking for this. We're looking for divergence. We're looking for currencies that are moving away from one another, and doing it fairly steeply and rapidly. So Canadian has broken down below the midpoint now. If that continues to move shorter, we'd want to pair it against something that's got that equal movement to the top side, to the strong side. So yeah, there you go. I think we've hit everything. We've hit crypto. We've talked about some trade ideas there. We've hit the futures market, looking at what's happening there. Really mixed biases on the S&P, on crude, on gold. Although we did talk about some key levels. Again, on gold, we'd be looking, if we can break back above this 1815 and close above that, would be a nice spot to go long on gold. On the S&P, the decision point here really is that 3125. It's if we can break back above 3125, close above it, even though the biases are mixed. I mean, if you're looking for a trade idea, nice spot to look for potential buying off of that 3125, at least in the short term. Although I do feel like if we get up to that 3150, 3155, it'd be a spot to look for reversals off of. But with that said, if you're trading on trend specifically, it's a mixed bias and you don't trade at all. So like for the small account challenge, we're not taking the trade today because the biases are mixed, right? But those that just want ideas, there you go. So yeah, that's everything. We've hit it all. I hope you have a great day. We'll talk to you soon. have a great weekend. And please, if you don't have a trading plan, take the time to develop one this weekend. All right, bye.